this is a topic that has to do with market structure. So this is what will help you understand what's happening in the market. So we're going to talk about the ranges, how to understand your trading range, because you can't trade, or you don't trade from anywhere on the chart. So by using highs and lows, you are going to understand where you should be trading from, right? So want to understand what happens, how the market moves. So I'll start by sharing a whiteboard so that we can be on the same page. So let's say this is how the market is moving, right? This is a high, right? And this is a high. So this high, let's mark it higher high, right, is formed after a break of this one. So for you to get the low, remember we are doing highs and what and lows, right? So for you to understand or to mark the low responsible for this higher high, you have to look for the previous high, which is this one, and the low that is responsible, or the last low of that was formed after this high is your is the low you are going to take for the high, which is this one. So what are we saying? Before the formation of this high, we took out a high, right? So that high which we did took out was taken out by a move that started from here, right? So that low that would have started a move that breaks this high to form this high is the low you are going to consider. This high breaks this. So we want to understand the low that took out this high, the last low responsible for the break of this high, which is this one. So our range of trading will be this from here to here. So this is the low, this is the high, which means we are going to be trading inside here. We don't take trades outside of this range. You understand? So whatever we are going to do, we are going to do it inside this range. So if this is a bullish, we are going to look for bullish order blocks near the low. And if we have a bearish scenario like this, high, low, we are going to be looking for sells around this high, which means if we can divide that range into 4 pieces like this, we want to be playing in the first quarter, this one, if you are selling, and we want to be playing in this quarter if you are buying. You understand? So if you are looking for order blocks, we are looking for order blocks in this area if we are selling, and you are looking for order blocks in this area if we are buying. Do you understand what I'm saying? Right. So this is where we are going to use that theory of buying what low and selling what high. It's going to come from this one. So what we are saying is high, low, right? We are going to be looking for buys around this area. But this is our trading range. We are trading inside this, but we are considering order blocks that are inside this first quarter. So okay, let's go on a chart. Right, this is jumps 25. What are we doing with jump here? Let's do this, right? Okay, as you can see, this is a low, right? This is where where price turned, right, from this area, right? This is what we have, right? When this is taken out, we have this high. So this high is what we are marking as our high. That's number one. We mark a high first, right? After that, what are we looking for? We're looking when this high was formed, it took out this high. It took out that high. When this high was formed, it took out this high. Did take out this high, right? So what happens when this high was taken out? What was the low, the last low responsible for this? So we have a lot of lows, but what we are looking for is the last low where it turned before breaking it, which is this one. So from here, okay, from here, this high to this low, this is our trading range. We are looking for order blocks that are much closer to the to the low, because we want to buy. So we will be looking at this as our order block. Oh, okay, let me just mark with this line, right? This is the OB, then this is another order block, right? So these are the order blocks we are interested in. We want as closer to the low as possible. So these ones are mitigated order blocks. So I would have wanted a scenario where price would have retested everything to this, something like that, to this order block, right, and go up, but didn't. So what do? We move on to the next high. As you can see, this high was taken out and we formed out this one, this new high, as you can see here, this new high. So that's okay. So this is the new high. Let me just mark with this. This is the new high, right? Before breaking this, the last low is what we are interested in, which is this one, this low right here. That is the low we are interested in, and the order block we want is that OB. And as you can see, price came retested, but it did break a bit, break some order blocks and some lows before going up again. Then we have this high where price is currently at this high, right? So price is currently here, right? That's the high, and this was the high that was taken out, and the last low is what is this one. So as you can see from what I have just drawn here, this is our trading range. This is our range. So what are we waiting for? We're waiting for price to either retest this OB right here or this OB. This is the range you want, and we are not interested in this one because we want as closer to the to the low as possible. So what we are looking for is price coming to retest this and going up like that, or price coming and retesting this and going up like that. This is what we are looking for, because this is our trading range. You understand? Let's look at another example, because this seems confusing. So let me just look for a, yeah. Let's look from here. Right, we have this high, right? Then from that high, what do we have? We have this low, right? So this was our trading range, but what were we waiting for? We were waiting for price to be going all the way around here and drop, but as you can see, price did not do that, and now we have another high here, right? And from that high we have this low, right? So this now becomes our range. So we'll be waiting for price to go and retest this order blocks in this area, and price didn't get there. So let's start from this low, right? So we start marking the high. This is the high, right? From that we have this low. So this is our trading range for this, and we will be waiting for price to retest all the way to here. But when this was taken out, we now have a new high, which is this one, and a low, which is still this one, right? So we still keep the low. This is still our trading range, and price did not retrace all the way to where we would have wanted it, and we have another high, and our low now shifts to this area. And as you can see, we retested all the way to the low and retest this order block, and we're going up. And as you go up, we take out this high, we form a new high, then a new low is presented here. This is what we have, and after that the OB is this one. We wait for price to retrace and retest this one, this OB, and the retracement didn't get to our OB. We move forward. This is the new high, and this is the new low. As you can see, what are we going for next? We're going for order blocks, and as you can see, we have an order block in this area which price did not retest, but you do take this as your order block, the red one? Obviously no, because that is not an order block from what we have discussed since the beginning of this masterclass class. So this also is not an order block. What would you take? You would take this. Why? Because this candle took out that candle after the movement. So this would have been your OB, and price would have retested it and went. So now we have a new high and a new low, and after the low we have what? The order block. And where is the order block? The order block is the red candle, and as you can see, we are sitting right in it. In what? Okay, let's look at this. This is M15. This is the high. We have the high. Yes. Where is the low? Our low is here. So where is the trade? This should have been our trading range. So we only sell in this area, right? After the break of this low, we form another low, which is this one. Then after that, we form a new high, which is this one. So you use weeks. You mark weeks. So price would have been nice if to have retraced all the way to this area and drop. So we break this, and this is a new low, and this is a a high. Where is our range? Our range is this one, and you see what happened. So you don't sell even here. You see price, these two lines is your trading range, right? Which means you are ignoring all this price action, and you don't sell here. You only sell inside the range. That is your trading range. So you only sell there. So you are ignoring everything that is happening here. But the moment it gets back into the range, retest your OB, you are striking right there. You are striking. Understand? So that's what you are doing. This is a high. This is a low, right? And as you can see, high, low. So the range is here. What are you doing? Marking the OB. And yeah, that's all you are trying to figure out. So you can do this on any time frame, on any pair, any day. So if you look at this, let's see, this was a retest of the OB, and as you can see, we had this order just to follow price. That's follow price. Just a back testing what, but it was a very good sell. We have a high, we have a low. That's your range. High, low, high, low, high, low, high, low, high, low. Understand? High, low. So let's just mark this. This is your high. And where is your low? This is your low. That's your trading range. You only sell inside this. You only sell inside that. When it gets broken, you move. Sell here. When it gets taken out like this, you move your range. That's your range. You're selling close to the close to the high. And you see, that's all you are doing. That's all you are doing, guys.